good to go.
Sounds great. Well, welcome to today's Tech Ranch Venture Outfitter Weekly. This is Kevin Coyne. Today, we're going to have a special program talking about wealth management for entrepreneurs. Just because you're building your business, you got to make sure that you actually figure out how to take some out for long term. We'll be talking about that today. Today we're, again, venture outfitter. Want to make sure that everyone gets to participate in today's call. We'll have some time to actually interact with the speaker, but we'll have kind of a, more of a generalist type of session to be able to interact with them. Want to mention really quick, of course, I always appreciate DualWorks and what they're doing for the Tech Ranch community. DualWorks is the co-working place that overtook they actually bought out the Tech Ranch co-working location, and we've opened up our office again at the Tech Ranch. The Tech Ranch is now at DualWorks, so it's like we're back to that. But the main thing that I want to say about this is whether or not you're in Austin or you need a point of presence in the U.S., Linda at DualWorks has done a really great job about making all sorts of different levels. You can actually get a physical space starting at $200 a month, but if you're looking for even just a point of presence mailbox, you can actually take advantage of what they have, even less expensive, and just let us know and we can connect you. Today's program, we're going to be talking about wealth management for entrepreneurs, and I mentioned that's today's program. This thing that's going to happen next week is, as we've had a handful of community conversations, there's 3 different types of meetings that we have. As you've seen in the last few weeks, we had the Secretary of Technology, Entrepreneurship, and Innovation for the country of El Salvador with us, telling us about what's happening in the country of El Salvador and telling us what's happening with this Bitcoin legislation that's about to be announced on September 7th in El Salvador. Real exciting type of stuff. The second thing is the type of meeting that we have today, where we have a very tactical conversation about things that entrepreneurs need to know so that they can take advantage of, whatever knowledge might be to be successful. The third is, since we are a community of entrepreneurs that are driven by vision and values, part of what we do is we spend some of our time talking about how can we innovate. And a lot of times, like in this case, we'll be talking about, a couple of weeks ago, we talked about how some of the entrepreneurs had different solutions for helping Afghanis and Americans get out of harm's way in the United States. Get back to the United States from Afghanistan. We're going to follow up on that conversation. It'll be more generally focused around refugees in general, and that will be next week's talk. And part of what's happening is, instead of it being when I say a community conversation, instead of there being like one person speaking, I really want to have interactive session with lots of different people in the community. So if you have something to say, please come and we'll have a conversation about this. And then on the 16th, we're going to have Chris Hughes come speak to us about LinkedIn, how to leverage LinkedIn for, how do you leverage your profile? How do you actually do? He's done an amazing job in a very short period of time with his own marketing business, and he's helping the Tech Ranch do the same. In fact, the video that I posted about the Afghani situation and calling for open innovation solutions, got more than 1,100 views within 48 hours. So, this is part of what I've learned from Chris, and he'll talk more in depth about how to actually dig in and use your LinkedIn profile to drive results. So we'll be connecting around the community. Make sure that you're on the Mighty Network. We can send out a link to you. If you have any questions, please hop on. A lot of times during this slide, when we actually have this slide, a lot of what we can do is we'll have entrepreneurs step up and say, hey, I'd really like to be able to talk about the following thing. I'm saving the time for today's talk to the speaker, and so that the speaker can, we'll have Steve interact with you more about how to, about how to manage wealth and stuff like that, and how to get there in a short period of time. So instead of spending anything, since I didn't pick one of the entrepreneurs to put on the hot seat for this slide, we'll just keep on going. So a reminder of our service offerings, make sure you take advantage of the free information, the campfires and stuff like that. Obviously, if you're interested in getting involved in the next level up, we have the VO network. The VO network has several different offers, like if you want to gain access to Amazon Web Services and different things like that. We have to go through there are costs associated with that second layer up. And part of that is we just have a nominal charge, $90 a month, for getting access to those type of things. It helps us cover some of the costs associated with that. And then programs, investment support, and portfolio. We'll talk more about that in coming weeks. But those of you all that know me know that I like talking about Sun Tzu and bringing Sun Tzu. Actually, you're bringing in lots of different aphorisms from many different people. And so in preparing for today's talk, I was thinking, what's the message that I want to send by bringing Steve Ayers to come speak to us today? And so this quote is probably the most important thing. First, make yourself invulnerable, then find the vulnerability in your opponent. In the context of a startup, your opponent is not the competitors out there. Your opponent is whatever it is that you have as your vision, or the things that are blocking your vision from becoming real in the world. That's your opponent. I don't see the competitors to our firms as the opponent. The thing about it is, since this is a community of entrepreneurs driven by values and vision, the real key thing that we're focusing on is what's in the way of you bringing your vision to the world. And, as we always say at the very end of the programs, we're a group of entrepreneurs that, let's go change the world for the better together. So as we hear from Steve's been a friend since college. He's been an investment manager for many, many, many years. And it's interesting because as I had my success as a technology entrepreneur, I didn't know what to do with the first chunk of change that I had. And I went to this one investment manager, and I kind of just sort of like hopped in and handed this person a big sum of money. And this was not Steve, by the way. And, that didn't grow. Nothing really happened. I handed it to the next person because I was like, okay, the first guy didn't work. And make a long story short, the second person, again, I didn't have the understanding of who I was really talking to and how to manage that type of person. And then I hear from my college buddy that he's doing that type of work. And I'm like, wait, I know this guy back from, being 19 years old and being at UT Austin and interacting with him. I know his soul, right? And I was like, well, if he's doing this, he probably has the answer. And to make a long story short, it was only in that first couple of years, right after I handed him a chunk of change, that he made all this money for me. And I'm like, Steve, where you been my whole life? And I didn't even think about it. So part of what's happened is, as I've been building Tech Ranch and Steve's been managing, some of my funds and stuff like that. Part of what happened is I started learning from him myself about how to do this in a better sense. And I wanted to invite him back into the conversation, mainly because, well, Steve's firm has actually been a sponsor of the programs in the past. And we also get him to come speak all the time to different, or historically, we've gotten him to speak to our different groups of entrepreneurs, and it just felt like it was time to do that. So what we're going to do is we're going to switch off, and I'll have him share his screen. And part of what we'll do is we'll hear from Steve and some different ideas about what should we do, especially that early stage in entrepreneurship, to get involved, pick things up. What should we be doing? Steve, welcome to the VO Weekly. Thanks for being here today. Thank you for being a long-term supporter of entrepreneurs and their whole wealth creation process. And let me hand it over to you. It's good to have you here.
Thanks, Kevin. Can you see my screen?
Yes, we can.
Okay, terrific. All right. I don't want to call myself a Zoom rookie, but it sure feels that way. I haven't, most of the stuff I've done has been one-on-one. So, bear with me, but it's great to be with y'all today, and, happy to get this kicked off.
Yeah, happy to have you here today. And certainly, part of our context today will be, we're going to be having a conversation. Part of what I'd like to do is, if anyone has a question that they'd like to ask, I'll be asking Steve some questions as he goes. He's going to go through and present just present a few slides. The main thing about it is, and kind of give us a little bit of a background about himself. But if you have questions, go ahead and throw them into the chat session, and then we'll also have some time where we can actually ask directly as well. So go right ahead, Steve.
Okay, so I'll just say I don't really have. You're going to see very few slides here because what I'm hoping to do is have a conversation. And when Kevin and I talked about setting this up, we said it's going to be like Oprah. On the comfy chairs kind of thing. So,
well, and everyone, I think most of the crowd that I see right now, or for the people that watch the video later, one of my dreams is to be the Oprah of the technology entrepreneurs that are actually changing the world for the better. So that's where partially that comes from.
Right on. So one of the, as I thought about this talk, one of the things, I could do a very dry 20-slide presentation and talk about the different types of retirement plans that are open to, entrepreneurs, and that are open to anybody with any kind of income, and this and that, and the income limits, and et cetera. But I realized that, well, first of all, it became very clear to me that we're not necessarily dealing with 100% of people in the US. So much of that might be irrelevant. So rather than go through that, and the principles of saving and investing are the same, no matter where you live and no matter what currency you transact in or any of it. So I thought what I would do, and I'll ramble until Kevin stops me. So, but I can start rambling right now. I'm going to talk a little bit about my own kind of how I handled the step into, because I'm a startup as well. When I started my company, I had a few years of Wall Street research experience. I had a year with a technology, it was an energy technology. They call themselves a merchant bank, had some sponsorship from Mizuho, who, if any of you are familiar with the Japanese banking system, they're this enormous, slow-moving bank. But anyway, the punchline is I kind of got, I got tossed out of work, and then 3 weeks later, 9/11 happened. So my opportunity cost for doing something new, exciting, scary was pretty low, which was helpful. But all of that said, the real question, so the way I managed my own finances through the startup phase, I think might be instructive. So the first thing I would say,
give us an idea. What was it that you did at those early stages, especially during such a hard time? Right after 9/11 was pretty rough. A lot of us, including myself, lost a lot of money through the whole process. What'd you do to actually launch a firm?
It took me the better part of a year, really, to first of all make sure I wanted to do it. The fortunate thing was I got a little bit of severance from the last shop. The first thing in my notes here that I'm going to tell everybody is maintaining a frugal mindset is critical. And I did that before I found myself as an entrepreneur. I went to a fairly fancy school and for business school, and paid for that with a combination of scholarship and loans. And when I was working at the hotshot investment bank, I put every dime, I got expatriated to Hong Kong. My expat allowance was actually bigger than my regular comp. But the punchline is I try not to let that get to my head. I threw everything I could at getting those loans paid off from business school. So when I came out, when I found myself out of work and trying to figure out what the next step would be, I kind of had a pile of cash and I had that retirement savings. It wasn't much, but there was enough. I was buying myself time to sort of walk the earth for a little while and figure out, do I want to go back and get a job, or do I want to start something that would be mine, that I could, if I felt like I had a better way of doing things, a better mousetrap, could do it better than the Morgan Stanleys and the Merrill Lynches of the world, maybe that would be something I could build. And so, everybody's got their own story about it's a regulated business. So I got to go through that process. Online brokers existed, but to not everybody would take someone in my position that had no book of business. So I had to hunt around to find, all of those sorts of things. So
figuring out first customers, and you were actually, like I kind of said, was Sun Tzu. The part of the thing you were doing, you said you paid off all your debt as quickly as you could. First, make yourself invulnerable, right?
Yes.
Get rid of the debt.
And even then, your invulnerability is I don't know if you call that a stretch goal or if you would call that an ideal that you're shooting for. So, but yeah, make yourself less vulnerable, certainly. If you use a poker metaphor or a blackjack metaphor, if you have an edge, you got to stay in, you got to size your bets so that you can stay in the game, because your luck is going to be variable.
Got it.
So, I can keep riffing on this and talk about, one thing I'll say is I treated my retirement savings as sacred. That would be a significant thing that I want to get across, because and I'll show you. I can step through the slides. I think the talk is going slightly out of order. There's only 3 slides, this one and 2 slides with content on them. So, but I'll get to them. I guess the bigger point is that's the bet that you kind of keep running with. And so, and the thing, one of the bigger discoveries I've had, this is going to end up being something of a mess, so just bear with it, but is the value of time. Okay. Especially with a retirement long-term portfolio. I'm going to skip around this thing. I'm going to put this slide up that I think is probably the most important. I want to listen to Jim Cook at some point, but I figure listening to him, Kevin's probably covered all his stuff pretty well. I like him because, Kevin and I like beer. I just finished reading his book, which is awesome, called Quench Your Own Thirst. And there's even a tie-in with investing because Boston Beer Company is publicly traded. So I'm going to hop out of order and get back to that. I'm going to put this slide up. No, we're not doing that right now. This slide I'm going to keep up for as long as I can, because it is super extremely important. This stuff is not intuitive. So you see that Scotch tape on there? That's on my monitor. I do this all day, every day, as far as looking at investments. But I can stare at a Bloomberg terminal with red and green numbers flashing at me all day, and I lose sight of what's on this screen here. Okay, so the point of having
at the top of that, it says compound value of $1,000 invested at different rates of return for varying durations is what's at the top of the card that he's pointing to.
I'm sorry for everybody who's on audio only, right? And so I can read through it. Like, all right, so there's a vertical column, different percentage rates, horizontal column, different numbers of years, and I cannot emphasize enough how difficult it is to internalize what's on this simple slide. The main point, I think, is how much things accrue to time, because you don't have to, you don't have to shoot the lights out on your investments to do well. If you get 8% for 30 years, every 1,000 you put in year 0 is 10 times that in year 30. And, I'd only be guessing at the different ages of people we're talking to here. But I can tell you, I couldn't really internalize what 30 years meant. I could hear it, but I couldn't understand it until I went to my 30th high school reunion a few years back. And then it's like, okay, now I guess I know what 30 years means. I was in high school with these knuckleheads, and now we're kind of, somewhere in middle age, and many of us have kids, and, we're either married or remarried or whatever, and all this kind of stuff. A lot of life has happened. We've mellowed out, etc. Most of us have. And, but, that's a lot of time. And when you're 25, I was 25 once. I was a wonderful person, but I didn't get this. I could get it intellectually, but I couldn't get it viscerally in my guts. And so now I finally can. That's why it's so hard. You almost have to trust what's on here if you're younger. Okay. And so, look, I made many of the mistakes that one could make. And it's natural. So you got to kind of fight human nature on this. But, my job as an investment manager is kind of to move that, to move top to bottom on that rate card as best I can. And then the job of an investor is to hang in there and help move it left to right, is to let time pass. And again, your venture is separate from this piece of what you save. And, it's almost, you know what, Kevin, do you mind if I go back a slide and we watch Jim Cook for 2.5 minutes?
Yeah, go right ahead. However
right.
You want to. Like I said, I like to keep things fun and informal, so feel free.
So, all right. Jim Cook is the founder of Boston Beer, Sam Adams Beer. It's been around since 1984. Like I said, his book was great. I read the book just a couple of weeks ago. All right, a stupid story around that. I ran into him again because I was binge watching Bar Rescue, which is it's an interesting show about entrepreneurship, it turns out. And, you see there's a lot of people out there who aren't so good at what they do, or they end up becoming entrepreneurs for the wrong reasons. Well, anyway, he showed up on the show, and I'm like, I got to look at Boston Beer again and see how they're doing. And it turns out, they're doing great. I didn't realize they're in the seltzer business now. They own Truly Seltzer. They acquired Dogfish Head Brewery, and they're still innovative. They actually have this interesting character. I'm forgetting his name, but he runs a piece of what they do out of Burlington, Vermont. And he's multiple, he did 7th generation cleaning products. He's had 300 million, 9-figure revenue companies in his life, and they hired him back, I guess. He runs, I think they have a Coney Island brewery and some other sort of mini ventures. They're actually really active in, their niche in the venture community. But, and I was like, I wonder if he shows up, I wonder if he's been interviewed. He's everywhere. So this was from CNBC a few years ago. I'm going to just sneak it back a smidge here. But let's listen to him for 2.5 minutes.
Sounds great.
Hope the audio is okay.
Steve, I think can anyone else hear it? I actually cannot. Okay, so do this. Stop sharing, and when you share again on the screen that'll come up, there will be 2 buttons to actually share audio. Stop share.
Okay, stop share. Sorry. Thanks.
And now click on share screen, and when you click on that, there will be there's going to be optimized for video clip and share audio. And that would be great.
All right, hang on a sec. So I'm going back to share.
Yeah, and while he's doing that, I'll actually just frame it. So one of the things that I know about Steve is he does a lot of background research in a lot of different companies. He's got an alternative way that he looks at the market than kind of the traditional guys. Like when I was ragging on the guy at American Express Financial, that in my first experience, Steve actually looks at companies and the basics, the fundamentals of that. Go ahead, Steve. Share screen. And then there's going to be a button there that says audio.
Oh, audio, beg your pardon. I'm on video and it's looking for a video file. So computer audio, got it.
Perfect. Yeah, go right ahead. Bring us back.
And we're back. I'll rewind and re-forward. I appreciate y'all's patience.
Share screen.
Had a number of.
Whoops, we're getting there. Yeah. All right. I'm sharing computer sound. Now I got to share screen. There it is.
So while you're doing that, I got a couple of different questions that are coming in. We'll do the questions in just a little bit.
All right, let me see if this works. Give me thumbs up if we're going.
Some of it, I'll give you something. Okay, when I was first starting the company, at the very, very beginning, I had a number of investors. One of them was my uncle, who started as a salesman, selling hardware, and eventually got the job selling bonds at a brokerage in New York City in the 60s called Goldman Sachs. Became a senior partner, very ethical, honest, driven guy that was very well respected as a senior partner at Goldman. And he called me up one day and he said, "Well, Jim, what do you?" Because I was just thinking about getting the business going. He said, "Well, what are you doing?" And I said, I told him, "Well, I was looking at buying a computer when I was in New Hampshire so I could avoid the sales tax and bring the computer down here. It's like $150 in tax." And he said, "Oh, that's really interesting. What do you need a computer for?" And I said, "Well, to keep track of the revenues, the sales, and stuff like that." He said, "Oh, you have any sales?" I said, "Well, no, I haven't gotten to that stage yet." He said, "Jim, I've seen a lot of businesses. That went broke. They all had plenty of computers. They went broke because they didn't have sales. So forget the computer. Go out and get some sales. Get a customer. Get one customer a day. That's how you build a business." And he was right. We didn't have, so he said, "Jim, don't play company. Figure out what you need to do.
Make the company first."
Yes, he said, figure out what you do, the two things you need to do right, and don't do anything else." And so I figured, all right, two things I need to do. I need to make great world-class beer here in the United States, which nobody was doing at that time, before craft beer was even a term. And then I need to work my butt off to sell it.
All right, that's what I wanted to show you. And, why did that resonate with me? Is because look, I was in a spot, I'll wind the clock back a little bit and say, I had a contract from Regis to have an office. I think at the time they wanted about $900 a month. It sounded amazing, except, I just couldn't bring myself to sign the thing because I didn't have any revenue. And I just knew I was going to start pissing money away. Kevin,
I see the same thing with, I see the same thing where an entrepreneur will be like, well, should I be this type of LLC or this type of S Corp or this type, or they spend more time concerned about the bank account than they do sales. Yeah. Nothing happens until someone sells something is the way I've said that in the past.
Yeah. And so, Jim Cook, I can't recommend the book to entrepreneurs sort of more with a more enthusiastic recommendation. And look, he was a hotshot at Boston Consulting Group, and then you find him literally going from bar to bar with, cold packs inside his consultant's briefcase filled with samples.
What was the name of the book again?
It's called Quench Your Own Thirst. You know what? Allie, do you have or can you find the link in Amazon and just put it in the chat? If you could drop that in, okay, thank you. If you could drop the Amazon link in the chat for that book. It's, like I said, it's an easy read and a lot of entertaining stories in there. Actually, if you continue to watch this YouTube interview, he tells more of the stories that are in the book. This story that I shared is in the book, but he's certainly not mistake free, and he talks about a lot of that stuff. But it's a great memoir, and he wrote it himself. I think that was the other thing he talks about. There's a lot of in the interview he talks about a lot of these things are ghostwritten, but it took him 3 years to write his memoir. So he's big into authenticity. And look, the other thing I say to people who think that the way I do it is stupid, or what's your crypto strategy or something like that, I say, look, there are as many ways to make a fortune as there are fortunes that were made. I don't know how to make money in crypto. That's not what I do. And then, I know how to do this stuff slowly. I think I know something about how to look at individual companies and individual businesses and see if they're worth investing in. I'm not too keen on going down that rabbit hole unless you want me to here, but that's a deeper conversation, and I really can go on for hours about any of that stuff philosophy wise. But more to the point of this audience, I think, in this conversation is just get your money in there and keep it in there for very long periods of time. And if it means an index fund, that's okay. That's not what I do, but and we could have arguments around one of the reasons I don't do it. I'm rambling here, so Kevin, keep me from going off the deep end here. But one of the reasons I don't go crazy with index funds is I'm old enough to, and I worked in Asia during the '98 Asian financial crisis. I can see what can happen then. I'm also enough of a student of history that I know what happened in Japan. The Japanese stock market had a huge bubble in the late 80s, had its peak price in about 1990, and I don't believe it has yet recovered the full value from that. So if you were indexing Japan, if you have, it wouldn't have worked out very well for you. So I don't think these things.
So that takeaway point is, don't just look at index funds. Steve's strategy is more about he looks at companies that have underlying value and then invest in those companies, individual stocks, as an example. That's what you're saying,
I would
Steve?
say don't put all your eggs on autopilot when it comes to retirement.
Got it. Perfect. So tell us a little bit more about, so you've said, I kind of was like writing down some of the different things. The power of compound interest is the first point that Steve was making. Second point was, don't play at company, sell, don't get distracted by all the different things. Third thing he said was, keep your spend low. He didn't go to the, he didn't spend on the office. He's focused on sell. Fourth was the book, Quench Your Thirst, that we just saw the clip from. Fifth thing was stay focused and invest in what you know. In Steve's case, he's saying, crypto's interesting, but hey, that's not what I'm doing. And so he's he's going deeper in this one place. What else? Any other concepts that you want to throw out there?
Sure. Let's see. I talked about, really, if you're talking about everybody comes into these things with different objectives, right? I can't, I don't know what each of your venture dreams is. I don't know what you're necessarily, what you're trying to accomplish. Do you need a fast car to feel fulfilled? Do you want to, save lives? I mean, I can tell you this, Jim Cook is a billionaire, but it was never his objective. I'll keep spoiling the book here and there. He said in the book that when he started out, he was hoping to sell $1 million a year worth of beer, and he would have been happy if he did that. And then things got bigger and better for him. So, I guess the question that people might have is, how much is enough and what does that look like? And that's going to be different for everyone. I've got, I have clients where they haven't taken this advice, and they sort of, I don't know if you can see a cursor on the screen, but they end up doing this game over and over again where they're they're making their returns for 5 years, and then they're like, I need to do this in my 401k. I'm building a house, or I'm doing a I'm doing this venture, or I'm investing in crypto because I think I know something, or Joe Rogan told me to, or whatever.
You're saying that they're hopping around and not actually getting the long-term impact of the power of compounding
They're pulling
interest.
money out of retirement accounts to go fund these other things that aren't core to their business in some cases. And that, to me, that's more like gambling. And you're not going to get that sort of snowball effect of just, it's boring. So some days what I do is pretty boring. I've got, today not much is happening in the market. Some stuff's up, some stuff's down. That's okay. And it's not, I probably got into this, when I was on Wall Street too, I can tell you that the whole system is designed to get you to transact. CNBC, Jim Cramer, all this stuff that's in the world is designed to get you to transact. That's what gets people watching Jim Cramer. That's what gets people on these, whizzy Robinhood accounts and things like that. That's not how you build wealth, though. I've got one of my clients has an HVAC business. He's had it for years and years. He goes, he's got his plumber's butt going around and fixing air conditioning around town. At this point, he works because he doesn't know what he would do with himself. But he hasn't had to work for 5 or 10 years. And it's because he just, in his case, he's got a SEP. He just throws money at the SEP year after year. He does his thing. I do my thing. Rinse and repeat. And, I've had people where I've had to tell them it's okay to stop working. You're independent now.
There's an important point that Steve's made in some of the conversations that I've had with him in the past. It's like, you got the core business, and then you have this investment strategy. It's like typically the way that I've seen this as well for entrepreneurs, right? Entrepreneurs build their core business, but you need to make sure that something might happen with the core business. So you have the longer term thing. And it sounds like this plumber that Steve's referring to, built up a bunch of cash, actually put it over in a disciplined manner into the second vehicle that Steve's been managing for him. And then he's now in a position that he didn't have to work. Now, if he's a product of the Protestant work ethic like me, he still wants to work. Just like,
Right.
It makes a lot of sense, right?
And I'll riff on that too. He wasn't trying to build an empire. He's got a couple of trucks. He's got one helper. And he's content that way. And I think, this is a business development question. Does he want to have 20 trucks and dominate, or get to 200 trucks, dominate a city, go make acquisitions, those sorts of things? The answer to that is no. And he didn't have to get, if the objective of your venture is some level of financial independence.
Yep.
Think about what that means. And that's a conversation I could have with you. or another advisor could have with you around what does financial independence mean to you? And it's really, if you can live off your investments, if you're spending, that's the other thing that's kind of cliche in my business about, spend less than you make. And so whatever that ends up looking like, but every time you go, it's okay to take risks, but understand what you're doing and understand what you're risking. And again, my advice would be put to the retirement savings and then leave that as sacred. Even if you do a tiny, a trivial amount, as long as that snowball starts, small and keeps going, you're going to wake up and be like, wow, I didn't realize that's where we're at.
That's perfect. So let's take a few questions. There was Paulina had actually posed a question. I want to pose the question: how do you handle the conversation with those who expect high return rates that are unrealistic, but are drawn by greed, et cetera, to like, I get 300% type of returns? How do you handle that?
I think the first thing I would say about 300% returns is over what time period and how sustainable is that? If you can compound 300% for 30 years, I mean, that might be all the wealth ever created on the planet. A percentage return is a single dimension. This time piece is left out of that conversation. So that's how I would handle it. And anytime somebody tells me about a great trade that they've done on their own, I think, great, what do you have for an encore? It's virtually impossible to have a system that consistently works. And that's not the game I'm in. What I'm looking for is companies, businesses that have certain characteristics. A lot of time too, I can see something that's already had a great track record, but maybe they're a retail business that's only in half the US states, and with plans to greenfield build out to the rest of the country, things like that. So it happens that I have a lot of businesses that are founder owned and that were startups maybe decades ago that are in the public markets now, and they may have professional managers, or they may have second generation of their family where the founder might be on the board as a chairman and the offspring might be in management roles. As long as I can see that business is run well, I like that, because that's as much passion as it is whatever compensation they're getting, and these guys are less likely to bounce from company to company. That's a long-winded answer to how I try to dismiss the why aren't you making 300% a year kind of questions. I'm like, that's a nice parlor trick, but that's not an investment strategy for the long term. And frankly, you can't retire on 300% if you're only doing it with $1,000, right?
Yeah, you have to figure out how to have like a longer term strategy, like you're saying, compounding, but disciplined on a monthly basis. But why don't we turn off the video, and then what we'll go ahead and do is let's just take another question or two. Do I have anyone else that has a question? If you do, go ahead and signal by coming off of mute. And I can go ahead and ask Steve more questions myself. Kim, did you have a question? Nope. Okay. Sorry. I saw you moving your hand and I was like, I thought that might be the signal. So Steve, tell us a story or two. You told us about the plumber guy. Give us another story of another entrepreneur that you feel like has done whatever he or she was doing, what they did right. Like give us some ideas about what was happening out there. Yeah, don't share my story because it's not the right story. But what would be the what would be the best?
So on the entrepreneur side, someone going from sort of like, I mean, on the zero to hero type of thing. I mean, I've worked in the past with a game developer who was, he was very successful. I think he got impatient But, I mean, he ended up selling his company. And so he likes fast cars and things like that. So I think that's kind of where that one went. Let me share another story about a different client who was kind of corporate the whole way, but just really had that saving and investing mindset. And I think she thanked me because she had worked in corporate security. She used to be kind of a government spook type, but then she worked in corporate security for a lot of years for a number of different oil and gas companies. And very matter of fact, very kind of nose to the grindstone type. But you know what? She wasn't happy. And we just kept looking at her situation. And as she was building up all this wealth, and I asked about her spending habits, and she said, I don't really need all that much. I'll take a trip now and then. She likes the outdoors. She had bought a rental property and was getting some amount of passive income off that. But then I kind of told her, look, based on what you're doing, based on what you've accumulated, you're good. You can stop working now. And for her to have me say that, and it's fairly simple math around, you should be able to safely harvest between 4 and 5% of your asset value in an investment program. And not, there'll be variability around that, but it's not going to destroy your principal. Your likelihood of ruin in a situation like that is fairly low.
So you're saying you get this big bucket of cash that you've invested on the behalf of their individual, and then every year I'm taking out 3 to 4% from that.
Or call it 3 to 5%. I mean, that's kind of an ideal. That's where you want to be. But there's we're trying to if you think in terms of like blackjack or poker strategy, you're trying to minimize the risk of ruin, right? And all she needed to hear, and the other punchline there is she's working again. She quit. She knew she could. She left the last firm she was at. She was over the moon that she didn't have to go into work every day. She had a friend who was doing something at a different place, put her on a contract. She can do that for a while to pass the time. She's really into helping military veterans, especially those that got, war injuries or disabilities. So that's her passion thing. And she's spending time volunteering with that. And she might end up getting an executive position there that's not going to pay her enough to, to live the lifestyle. But between that and between knowing that she can tap into the assets that we're continuing to grow for her, she just feels liberated. And there's a power in that. And this is the thing, and again, I'm all over the place here, but what is retirement anymore? That's sort of the typical, people want to feel like they can retire, but I deal with a lot of people who are retired, and I can tell you the main difference I see between the ones who are happy and the ones who are shaking their fist at television all the time is projects. One word, projects. If you have projects, you're never going to grow bored. You're never going to feel useless. And the projects don't, if you're financially independent, which means you're not overspending your ability to earn, whether it's your assets doing the earning or not, then you've got all the liberty you need to do whatever project you want. And so, Jim,
this is where this is where Steven says, freedom.
Something like that. That's
exactly. Well, so let's look over that list. I have the Steve's 9 things. I took, every time I tend to take notes. through the whole thing. I'm going to run through the thing, run through the list again. Steve, if I miss some part, just correct me as I go down the list, and we'll go through it. So first points, and I think you drilled it like a nail into our heads, is the power of compound interest. Power of compound interest, the power of compound interest. Don't take your money out too quick. And, don't just focus on the ephemeral 300% return. That's not going to work either. Second one was, don't play at your company. Don't play, sell, sell, sell. And you said, that was the example from the video that you talked about. Third thing, keep his expenses low. Steve started this company in 2001 and was saying, it was right after September 11th, got laid off by the previous firm. And he was like, well, I think I'm going to go do the following thing. He kept his expenses low. He didn't get the fancy office. He just focused on selling to clients. Fourth thing, he recommended the book, Quench Your Thirst, and we'll make sure that in the show notes that's available and we can actually go through that as well. Fifth thing, stay focused on what you know. As an example, Steve's point on this was, you can make money in the stock market. That cryptocurrency thing that, we have actually had a few people talk about in the past, the cryptocurrency thing, I don't know that. So let's focus here because we can certainly make money here. Sixth thing, know how much is enough, right? Know how much is enough is what I heard in that. Seventh thing, remember that the market right now is designed to get you to transact, not necessarily help you build value, and certainly not to help you build wealth. And that all the distractions of what we see on TV is that it's designed to get you to transact, and that's not necessarily how you make money. Go back to the very first thing about compound interest. Number 8, get to freedom. And in the case of the woman that I mentioned, 3 to 4%, she can do whatever she wants to. And then number 9, so that you keep your brain going, long term, especially after you're at that plateau and you're on the other side of the mountain, right? Make sure you keep your projects that keep your heart in the game and stuff like that. Did I miss anything, Steve?
You didn't, but I want to just point in the chat. There was a link that I couldn't find a good way to stick into a PowerPoint of a visualization of compound interest. So I wish I were better at doing good visualizations. I just, but the fact that I'm not, I do appreciate the power of a good visual. So, and this thing is something you got to scroll through in a browser, but I found it useful and I liked it. So just, click through to that if you want to see what, piles of money or what a sort of what a parabola looks like as far as, how these things kind of really are meaningful in the out years versus you could be at this for 10 years and be like, well, nothing's happening.
Got it. So it's like looking at the visualizing how I can compound wealth and getting to that point of financial freedom.
And
right?
Just not losing patience. I guess I didn't hear you say the word patience, and maybe that's my 10th thing, patience.
Yeah, well, that's the one that Steve tells me. I'm like, hey, Steve, how's my money? And he says, patience. Cool. Okay, well, great. Well, what we'll do is Sydney will grab that URL and she'll put it in the show notes. And then we'll also put that out into the TechRich network so that we can share all that information for anyone who wants to go back. There's also a form that Melvin had posted into the group. If you would like to get follow-up information from Steve, you can take advantage of that form. Steve, go ahead and Melvin, go ahead and post that back into the chat. And then Sydney, if you'll grab that, we'll make sure that we put it into the show notes as well for anyone that wants to follow up after the call and would like to be on that list just to find out more from Steve. That'd be great. What I'm going to do is I want to go ahead and bring us back into the conversation about, I went ahead and put Steve's email address on this slide. If you have a question you'd like to ask him directly, I highly recommend him based on my experience that I mentioned at the very beginning of the program. Some of you all might have missed that I went through 3 different investment managers and didn't make any money, had a lot of transaction fees till I actually, reconnected with Steve from, who is a buddy of mine from college. And within the first 2 years, I was like, wow, I wish I'd done this 10 years before. So highly recommend him from that standpoint. And thank you for being here against today, Steve. Part of what we'll do is we're going to have him come back. He does in the past at Tech Ranch, when we had the physical facility, he would actually give specific classes that go into more depth about how to interact with things. And I've benefited from a lot of that knowledge. I think that it would be great for our larger network to be able to do that as well. For those of you all that are both on live as well as that hear this, at some later points, watching it on the network. We'll definitely do that. We'll get that, we'll announce it on the Tech Ranch network. So make sure you actually are signed up there. Let's see. I want to remind you again that we will have the program on the 16th. And then I think that I might have actually missed, here's my other thing. Next week is going to be more of a community conversation. Right now, we have organizations that are represented from different refugee groups. There's actually a couple different technology groups. The gentleman that I mentioned last time who had asked me for help concerning getting Afghanis out of Afghanistan under the conditions they're in. I'm going to see if I can actually get him to come talk to us as well. Sometimes a little bit difficult because he likes to keep a low profile for the type of work he's doing. But there, in response to the video that I posted, there was even a couple of different church groups that said, "Hey, we're doing the following thing. We just got this group of people into Pakistan and they're now safe." I can share some of those stories about that as well. And I'm always impressed and surprised by how wide our network is and what we're able to do. So certainly, if you have something you'd like to say, please come on back next time. Since I'm presenting, I can't see your chats. This is one of the limitations of being on here. Okay, good. Just want to make sure I know what's going on there. Since I'm not at my normal computer, I am actually doing my best on this little laptop screen. So we'll make sure. Now, I will still be in the field, not in the country. I won't be in Texas, that is, for next week, but we will be having this time. If you have anyone that you'd like to invite, this is not a formal panel discussion, but a much more interactive. When we have a community conversation, it's much more interactive from lots of different voices. And what's great about that is we've had a couple of these community conversations that have created fundamental connections across different places in the world. So that have saved lives and driven business. Reminder again for DualWorks, I appreciate what they do for entrepreneurs, take advantage of their membership offers, and thanks for having their sponsorship for Tech Ranch. Linda Blackman, who is the founder of DualWorks, was in Venture Force 17, and we'll get her to come on and talk about that a little bit again. And then Steve, any final words that you'd like to say or wrap up as we finish up this conversation today?
Well, first of all, geez, thank you, Kevin, for inviting me to do this and putting this together. The format is terrific. Last time we were really doing these things, it was sort of, it wasn't nearly as easy. And I love the fact that I guess you guys are certainly all over the Western Hemisphere, if not the world, on this call. So, it's a lot easier than getting everybody together in a physical spot. And it enables us to do that much more. So, as much as I love the face-to-face, this has been tremendous. And yeah, I wish you guys the best in terms of both your ventures. I want to learn more about those, and also with the investing side of things, hopefully you've learned something. So no, it's been terrific. I really appreciate it.
That sounds great. Steve, thanks for joining us. Thanks for your long-term support for the Tech Ranch and also taking care of me and my money. And we'll definitely have you back to give us more insight, because I think this is one thing that a lot of entrepreneurs fail to do is, they work so hard on their venture and they don't necessarily, protect themselves, make themselves invulnerable for the long term. So thanks for being here today. So with that, we'll close up today's session. If you want to send an email to invest@steveayers.com, please do. You can also reach out to any one of us, and if you're on or post onto the social network, and we'll make sure that we get you back in contact with Steve. There's a few URLs that he mentioned. What we'll do is we'll post those onto the YouTube link for this session. And then also, if I'm going to be sharing some of the emails so that he can follow up with you directly as well. So with that, it's always an honor to be here as a group of entrepreneurs driven by visions and values. Let's go change the world for the better together. So with that, we'll call it closed for today. And I look forward to catching up with you next week as we have our community conversation concerning how to get the vulnerable out of harm's way. Thank you all for your time today. Take care, everyone.